Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Tuesday, the 24th of April. It's fascinating. Last Tuesday, the market was up dramatically. The fact that NASDAQ was up almost 2% and the S&P was up about 1.5%. So here we are. Everyone's biting the nails because it's Apple's earnings coming out today. Is that going to make a difference? Well, if you're an intermediate-term trader, you should be out of the market anyway. But we're going to be looking at several different markets today. As always, we'll start with our trade triangles, and we'll also be going to our portfolio manager. So here we are at the portfolio manager, and the S&P now is at minus 60, which means it's a trading range in essence. So let's just take a look at this, and we'll scope this in just to get maybe the last 3 months. And you can see it's been sort of moving sideways here. It is below the parabolic, which is the PSAR, which is one of the indicators we have here in on-chart study. You can see it right there. And what's easy about Market Club, if you want to take it off, you just click here, boom, and it's gone. Click back here, it takes that study off. So it's very nice to have, but let's put that back on for some of our other markets. So parabolic right here, click on that. It takes it right on the screen, and you're done and dusted. Very simple. So here's the trade triangles. Minus 60, you have a plus triangle, a monthly, which is the one we look at for the trend. Very, very important. And also, we look at the intermediate term trend as being the weekly. And of course, if you're a weekly trader, you're out of this market at the moment. So let's see how this market develops. But you can see this is last Tuesday's action. Boom, a big day, up 1.54%. Is it going to happen today? Well, I think maybe, maybe not. We'll have to wait and see what happens with the earnings probably afterwards for Apple. And I can't imagine that's going to be a very positive one because obviously the market's discounting quite a lot. So if we just look at the Apple right here, it's a minus 70. You can see, boom, it's down there trading at $559. Remember there was a call on, I heard Apple's going to go to $1,000. Normally when you get such euphoria to such an extent, it usually means it's the top of the market. And as I said, we had a blog posting, I want to say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 11 days ago. You can see it on our blog, has Apple topped out, and it turned out to be pretty accurate. So let's see what happens, but the longer term trend for Apple remains positive. You are in an oversold condition right here, and I think that's the key thing to look at. So let's just see how it closes today, and certainly tonight's earnings after the bell will be pivotal in terms of where we are now. But the general sense is people are getting a little bit antsy about Apple at the moment, but the overall longer term trend from 355 is still very much intact. So let's go to our portfolio. Let's look at our next market. It's pretty much on the Dow and the S&P, pretty much the same events there. Big day last Tuesday. Here we are, so up in the Dow. I would say if the Dow takes out the highs that we're seeing yesterday, which were 13,028 with 13,006, so another 30 points higher, I think then that we probably got some sort of bottom in here. But generally speaking, the market's moving sideways. You can see from this date here, this is the as of March 6th, we've sort of gone sideways. And I think the market's regrouping, but this is definitely the line in the sand. These lows that we've seen back here, this is 12,710. If we go below that, that's going to be not a positive sign for this market. So let's go to our next market, and that's going to be the NASDAQ. The NASDAQ is already this is almost looks like the Apple chart, doesn't it? That's how powerful Apple was to this particular index. But the longer term, like Apple, is positive. We are oversold. So we may see some further reversals to the upside, but we want to see a little bit more action to the upside to get excited about that. And maybe that's looking at the PSAR. So looking at silver, silver actually put in a very negative day yesterday. We are looking for this market to possibly go down to the 30.20. It's oversold, similar to where we were here and here and here. Generally speaking, the market is in a negative mode. But generally speaking, the monthly is still positive. Watch that very carefully because it's a good indicator of the longer-term trend. Now, looking at gold, gold's an interesting picture, and this is the picture. We've got the daily up, and I'll scope this in so we get a bigger picture of what we think is going to happen. And this is what I think is going to happen. I'll leave everything in here, but I'll just draw on top of this. And here's what we're seeing. It looks to me potentially like we talked about here. This is a nice big sort of, got another here, and this is like another one here. So this is basically, this is the head. We talked about this before. I was going to reinforce this. This is the left shoulder, and this is the right shoulder. If we're correct, this market will start to tick up. However, we want to see this weekly and the monthly turn green before getting really aggressive on the long side. It's not there yet, and that's the operative thing to know. But there's the trend line. We talked about this trend line coming in. The 1700 levels, the first area of resistance, and then 1800. The market needs to go over those levels before it's going to get excited. I'm not sure what's going to happen. It may not happen. We may be reading this chart incorrectly, but for the most part, you have to go with the trade triangles, which are still negative, and that's the key. This potentially could be the formation, but it's not there yet. So let's just clear the screen off and go to our next market. And the next market we're going to be looking at, let's get my cursor back, is going to be the copper market. The copper is sort of flattened out a little bit. Let me just get a closer look on this. So the copper market sort of flattened out, and that's reflected in our minus 55, indicating a trading range. Obviously, we got very oversold here, and the market came out of the Donchian trade channel. We've moved back up. The PSAR, which is right here, you can see this line has been hit, indicating that the short-term trend, which in this case would be the daily trend, is positive, but the longer-term trend is still positive. And this is also a Fibonacci retracement as well. If we scope this out just a bit, you can see if we go from the lows here, in fact, let's just do that, put that in. So Fibonacci retracements, I think they're fascinating. I don't know why they work, but they seem to work all the time. So we'll go from the highs here down to the lows right here. And you can see we just hit this 50%, almost the 60% retracement level. That's normally an area where the market will find support on a Fibonacci retracement. So let's just clear the screen and go to our next market. And the next market we're going to be looking at is going to be the crude oil. This is the June crude oil contract we're looking at. And again, this is market sort of flattened out. Hasn't got anything go up, but it seems like the volume picks up on the upside, not the downside. So I think the key thing there is if we just go a close only chart, we are, I think this close right here, and that's 104.66 or 103.56, so about a little more than $1 higher. We need to close, but certainly a close over the 103.82 level, so about another 30, 40 points higher. It will begin to sort of pick up momentum. We still think this is a longer-term bullish trend as signified by our monthly trade triangle. So let's see how that works out. So let's go to our next market. And the next market we're going to be looking at is going to be, well, it's the USO. It's pretty much the same pattern there. I want to watch that carefully as well. But generally speaking, we're longer term bullish. Intermediate term, we've got some weakness coming in. But if we scope this down, you can see the volume is sort of dry. It's going down, 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 down. You also have the parabolics flatten it, just beginning to turn. So I'll be very careful about being short this market. That's my gut feeling, and I think the market's the long-term monthly trade triangles. If you're long-term traders, you want to still be long the USO. So let's go to the euro right now. The euro is, I think, frustrating a lot of people. It's sort of up, down, sort of being flat. I still think the 134 level is going to hold the market, and the 130 level seems to be on supporting the market, which means it's supporting the euro down here. So let me just post that in. So this is right here, and this 130, and that's euro support. And we get to the 134 area, which is right here. 134, actually, is right here. And that's basically euro, and that's resistance. So that's basically how we see it right now in this market. So you sort of you can see it just trapped below here. It's just really not going anywhere. It needs to move out of that space before we can get excited one way or another. But the longer term trend based on our trade triangles is still negative, and the intermediate term trend is negative. So you should be, if anything, short this market right now. In today's rally, you could take advantage of that. And also you've got this 200-day moving average, which is coming in here, which is still down long. You see it's pointing down like that, so it's still indicating this market wants to go lower. So let's clear the screen And let's go to our next market. And the next market we're going to be looking at is going to be the Reuters Jefferies CRB Index. Now, again, the index is sort of chopping around. We thought the area, you can see it just really no volume, no real strong direction. But generally speaking, it looks like it's trying to flatten out, but it needs more confirmation that it's going higher. Only the daily's up. The PSAR is still above the market, so I would say just watch from the sidelines on this market right now. So this is Netflix. Of course, Netflix fell out of bed again today. It's down. But however, what's interesting, even though we're trading at 87.88, the monthly trade triangle is still positive. Now let's just scope this out, give you a sense of where Netflix has been. And let's just take everything off the screen and let's just look at a very simple chart. Take the Donchian channels, the PSL, and the simple moving averages. Everything is off there. And I have to go from the lows here. So let's scope that in a little bit. And we'll see how this is a Fibonacci retracement. So here we are. We are going to go to the Fibonacci tool right here. We're going to click from the very highs, dragging that down to the very lows here. So you're just pretty much in that zone a little bit further than 89.41. It's 88.03. You're sort of in a zone where this is the Fibonacci zone. Whether it's going to hold the market, I don't know, but certainly that is an area. I would say if it closes over 89 and change, 89.50, let's say, I think probably that is going to be a low for the moment in this market. But the intermediate term, if you're an intermediate term trader, you should have been out of this market at 108. Again, we trade with the trend, and the trend in Netflix, according to our trade triangles, is positive. So let's just scope this out, and the next market is going to look at Radio Shack. Radio Shack is a really, we looked at Apple. Let's just take a look at Radio Shack, the last stock we looked at. That's really taking it on the chin today. That is down 10% on a stock that was just worth $6 yesterday, so it's not a great move. But I think the important thing to look at is if you look at, and this is why the trade triangles are so powerful and so useful. So here's the last signal we had. And let me just take that off. The last signal we had was on June 7th, and that was in 2011, and that was at 1361. You can see it right here. And basically, the last weekly signal was 969. So I think you have to agree. Both of these trades have been excellent, excellent trades, and it looks as though this market's in serious trouble. Is Radio Shack going to go out of business? Maybe. Is it going to become less and less relevant? Probably. And Tandy, you remember, we have to go back to in the 1990s for this market to be at this level again. That was when Tandy they changed the name to Radio Shack. So they may have to reinvent themselves again, but it's getting harder and harder for retailers to do that given the internet. So, hey, this is Adam Hewison. I'm coming to you live from the digital studios of MarketClub. We certainly enjoy having you here, and I also want to tell you about the blog we have, which is really becoming more and more popular with members. The Daily Exchange for Tuesday. Do you remember what happened last Tuesday? Well, the market went up dramatically. So also check out some of the other things we have, the comments, and 12 comments already. So make your voices known. As a member, you would definitely want to hear from you and share your ideas, and we'll do our very, very best to reply to them. So this is Adam Hewison for MarketClub. Every success in the markets, and remember, we're rooting for you to be successful, and we're here to help. So till tomorrow, have a great trading day.